Hello, good weekend to all. It's Ado bringing you a review of the European markets for the trading session Monday, the 8th of March 2021. Apologies for missing last week's. I need to certainly stay on top of this. Been very busy, etc. with the kids, obviously with this homeschooling, etc. But either way, back now and bringing you a review of the FTSE. Now, it was certainly a volatile week with the bond market obviously clouding the market to a large extent, overtaking and maintaining the main focus. Okay, so it's all about bonds, it's all about yields, but nevertheless that didn't negate the fact that the markets or FTSE itself still remains quite strong and robust, and European markets as well, given the fact that there's talk regards to more QE. But US markets certainly came under fire. Nasdaq certainly came under pressure on the back of the rotation trade in terms of value and growth, and obviously the tech stocks or the tech trade certainly unwinding as well to a large extent. So interesting scenario. So let's start off in terms of the markets and looking at the bond market. Really, I think the bond market is a focus. So this is the French OATs. Okay, so in terms of the bond prices here, as we all know, obviously bond prices go lower, then indicates that yields obviously go higher, and vice versa. That's usually the easiest way of understanding it and interpreting it. Now, European markets certainly were spared the onslaught in terms of the bond market. Really, it was the US markets that were dictating the sell-off to a large extent, given the fact that the money was rotating out of tech to again with regards to increased regulation there, with regards to the vaccination program, certainly increasing quite radically and drastically, and obviously to a large extent is a net positive for the economy, and therefore obviously rotation out of the tech trade or work from home trade, and obviously going into the reopening trade, and really focus obviously helped by the strength in commodities to a large extent. Okay, nevertheless that was overshadowed by the fact that you got higher yields, stronger dollar, which obviously hurts commodities, and that's why we've seen a massive swing in the market until obviously we had a reversal on late Friday. Okay, so let's see exactly where we are. So in terms of the actual European markets, looking there, bond market, yes, we did get a sell-off in the bonds, and obviously I want to see talk regarding ECB doing more QE. That certainly helps stabilise Europe to a large extent. If you look at the bonds as well, that's usually a better gauge. As you can see here, bounced from support, pushed higher on the back of that news with regards to ECB purchasing more, stabilising the yields. And that obviously has helped to a large extent. But nevertheless, if this were to go, you are going to see the same sort of chaos and a risk-off scenario in Europe as well. Okay, now let's look into the actual FTSE 100 first and foremost. Okay, so late we did get a sell-off on the FTSE, but let's just give a look at the bird's eye view first and foremost. Okay, so in terms of the FTSE 100, let's just bring this up for you. Bear with me. Okay, so let's quickly save this. Okay, so in terms of the FTSE at present, okay, so looking at the weekly chart of the FTSE, the pivot high remains the key barometer in terms of resistance, so 6875. Okay, previous support equals resistance. A lot of activity there, but for now we got rid of that for now. Okay, in terms of the market here, now again this line does obviously coincide with previous support equals resistance around that zone. Now, the red candle, this bearish candle here, certainly is in motion. We've had a pivot high here of 6808, topping tail. We took out last week's bearish candle, okay. Still are consolidating within this red candle, which means usually you are indicating a potential bear flag scenario. Now, given the fact that obviously we've got this move in terms of the dollar index or yields concerns, dollar obviously pushing higher, which in turn obviously sends commodities lower. So keep an eye on that. Okay, keep an eye on that. Now, bearing this pattern in mind on a weekly chart. Remember, we're looking at a bird's eye view here. Let's just quickly bring up the chart of crude or Brent, should I say? As you can see here, the OPEC news certainly helped crude or Brent to a large extent. That's what kept the FTSE afloat, and certainly FTSE keeping strong, given the fact that everybody was expecting, or potential individuals were expecting, the fact that you had OPEC potentially increasing production. The Saudis kept everything at its current level, even with the vaccinations in full swing. Certainly helping the commodities market, or not overall commodities, but the strength in the dollar certainly didn't necessarily obviously hurt the price of oil. As you can see here, this rally continues. Okay, now we did have resistance here on Brent. Okay, 66, that's been taken out now, we're hitting 69. Next key resistance is seen at 71. 72 and then 73. So very, very impressive rally to say the least, and obviously the Saudis certainly helping oil, but we are now into a key level of resistance, so just watch out. There's a key level of resistance here. Now the reason why I'm indicating this chart here, FTSE obviously is a commodity index, okay? So if you are looking at a reversal in the FTSE, then you have to time that with the reversal in the dollar, i.e. higher, which obviously yields is the fundamental catalyst there in terms of US. And obviously, given the fact that Powell didn't obviously sound as dovish as everybody had expected him to, and that obviously triggered a massive sell-off in the Nasdaq, which again was over-leveraged, okay, on the back of immense liquidity. So that certainly got unwound, okay. Now again, I mean, that was exacerbated by the work from home, obviously trade being unwound as well, but I didn't expect it to be unwound that much. So again, I did get caught out with regards to the Nasdaq. I was certainly negative at one point during the week, but certainly turned it around towards the latter part, okay, of the week. But nevertheless, lessons learned, okay. So in the interim, okay, so if that bear flag on the FTSE in the weekly chart is to work, then we need to see a potential top in the actual price of oil. Now, obviously, vaccinations are helping oil because everybody's expecting that to go back. The commodity super cycle talk, again, that's helping given the fact that inflation is now creeping up, and these commodities with regards to the Sino-US war, Chinese obviously putting a great emphasis on minerals and resources, and again US as well. So again, given the fact that they are scarce, the war is certainly brewing there. Obviously the demand coming back in terms of travelling, etc. A lot of people are front running that, hence the reason why the argument obviously is that we are going to see a commodity super cycle. Obviously immense stimulus as well. Again, that's the argument there in terms of the commodity super cycle. So again, just trade what you obviously have firm belief in and what your interpretation or understanding is. A lot of fundamental arguments out there for it to go higher. From my understanding, this is extremely overbought at present. The only reason why obviously this is held and is as a float is obviously given the fact that the Saudis are manipulating supply to a large extent, and the demand certainly seems to be there given the fact that everybody's coming out of the lockdown scenario and the vaccination certainly accelerating that as well. Again, the argument of the commodity super cycle, inflation, demand is there, supply is being manipulated, therefore again, that's an argument, but one could counter argue the fact that we've rallied from 33 to almost triple now in terms of the price of oil. We've definitely doubled at present, and potentially looking to 90 or 75 and above. Again, that argument certainly doesn't sit well with me. Okay, certainly doesn't sit well with me. Again, the market obviously is always correct, and we can always be wrong, or we are always wrong as well to a large extent. That's what the stop losses are there for. So from my perspective, again, just conclusion, oil certainly is in a hell of a lot of resistance. Now, in order to confirm the resistance in oils, we look at the chart of USD CAD. Okay, so USD CAD now coming into support, given the fact that obviously the yields are helping that as well, US yields to a large extent. So for my interpretation, weekly chart of USD CAD is into support. Oil prices are into resistance. Dollar is now moving higher. I would expect the dollar to move higher along with USD CAD to move higher. CAD moves lower on the back of obviously oil moving lower. So a long USD CAD trade is amazing right now. That's my interpretation, which again, a long CAD trade is an inverse relationship with USD CAD and the FTSE. So again, watch out and play that as well. So that's just my interpretation. Now let's just quickly look at the commodity index. Now, even looking at the weekly chart of the commodity index, you can see a topping tail there, okay, certainly indicating exhaustion for my interpretation. And again, as you can see here, we've had a flush in the back of stronger yield. So the only real, obviously, commodity really that's held is oil, and that's again being manipulated by the Saudis to a large extent, okay, given the fact that they're holding the supply, okay, so not increasing it to a large extent given their cuts last time. So certainly take that on board, okay. From my perspective, oil prices are exceptionally vulnerable, okay, unless you believe in the commodity super cycle, which again is a different story altogether. The inflation story certainly seems to be increasing, and again, given the fact that the Fed not intervening, given the fact that the massive fiscal stimulus as well, there's a lot of arguments here, okay, a lot of arguments from a fundamental perspective, and I could argue all day. Let's just go back to the technicals. Okay, so weekly chart, bearing in mind the arguments that I've put forward for USD CAD, for US dollar, and a lot of other arguments that I can make as well. That bear flag scenario, okay, as well. One would certainly strongly expect that to play out, okay. That's my long-term potential scenario on the FTSE. Again, that has been helped by the furlough scheme being increased, okay, to a large extent. Okay, bear that in mind. There was some BOE, QE talk in terms of not being concerned about inflation and obviously increase the money supply, which again will help the FTSE. But ultimately, the FTSE is a commodity index, and if commodities are now topping out with the USD CAD bottoming out and dollar obviously starting to rally now, it certainly doesn't bode well for the FTSE going forward. Now, quickly bring up the US dollar chart. Obviously, we've had quite a rally in the US dollar, and we are now looking at some exhaustion. Any exhaustion, from my perspective, will be a buying opportunity, which again will cause the FTSE to certainly fall. So you're looking at a reversal and then a push higher, okay, in the dollar index. That's my interpretation anyway, okay, unless obviously the Fed come in and start jawboning. There is talk about yield control, etc. So we don't know what's going to happen tomorrow. All we can do is plan for what the status quo is right now, okay, the present. In terms of the FTSE now, moving into the micro sort of time frames now. So daily chart of the FTSE now, we're in this symmetrical wedge pattern now on the FTSE. So again, keep an eye on that. Be interesting to see exactly what happens here. We've hit the upper channel, okay, and we've hit the lower channel. Quite an interesting scenario here. So a contracting a wedge, symmetrical wedge. So keep an eye on that, okay, in terms of which way we break. My interpretation I've already given you is a move lower with the HNS formation potentially paying out. So there's your scenario. Then obviously a flush lower, but again, any talk of stimulus obviously causes the FTSE to move in the opposite direction. So this is why I like to day trade. It's very hard to forecast the market in a long-term perspective unless obviously you account for all the variables in the market at that moment in time. Okay, 60-minute chart. So it looks like the FTSE is certainly holding that resistance at 6,700. Okay, watch out there. Support obviously is held at 6,550, just above at 6,560. Impressive. I mean, that rally itself was very impressive on the FTSE in the back of obviously rising yields. So the FTSE itself has traded sideways in the back of the yield news, okay, which again has been helped by oil. So again, like I said before, oil stocks are the backbone of the FTSE. Now looking at the FTSE 100 oil and gas sector, as you can see here, impressive, okay. Resistance is up here, okay, so you've got resistance which has been held, support down here. Again, you are now coming into resistance on the FTSE. If we do continue to push higher, then solid resistance on the FTSE, which indicates obviously solid resistance on FTSE oil and gas, which indicates the FTSE is going to fold, okay, bear that in mind. Also metals and mining, if you are believing in the obviously commodity super cycle story, that's your obviously choice. Weekly chart exceptionally bullish, but we are now coming towards the end of that road, okay, from my perspective, especially with the yield story now catching and the market's focusing on a strong dollar, okay. That obviously ends the commodity super cycle, and therefore you are looking for a massive flush in the FTSE, given the fact that this was the real catalyst for the FTSE to go higher. So FTSE is under a lot of strain going forward, okay. So I would certainly be cautious on the FTSE long position, and my bias obviously would be short in the long term. But again, that could certainly change very quickly with regards to one central bank announcement, so just bear that in mind. And obviously you can change with regards to OPEC as well, if there is any so-called scenario that limits the supply of oil. Obviously that will cause the FTSE to push higher as well. Okay, so anyway, let's not go into it in too much intricate detail. We're trying to keep these videos as brief as we can. Okay, now moving on to the German DAX now. I'll quickly give you an insight on the FTSE 10 minute actually. I know this was it's labelled as a FTSE video, but I do cover the European indices as well. Also, I just want to give you a quick insight in terms of the FTSE 350. So daily chart of the FTSE 350, as you can see here, lower highs. Certainly isn't very bullish. Okay, certainly indicating weakness here. And the FTSE 250 has been the real strength gauge. But again, that's certainly coming into resistance now as well, as you can see here. So from my perspective, any potential rip, sell the rips as opposed to buy the dips. That's how I interpret it. Anyway, regardless, you are looking at potential support in this region here. So any potential pop on the FTSE come Monday, certainly from my perspective, we will certainly be looking to should be short and potentially even taking out this key support here, testing the key level at 20,000. So FTSE certainly under a lot of pressure. In terms of the 10-minute chart, let's quickly give you an insight there so you know your levels for Monday. Okay, so flush in the back of obviously the concerns regarding the yields, although we did get a late rally in the US. Again, as you can see how important the US market is for the FTSE to a large extent. So again, you've got support down here at 6,560 zone. Unfilled gap remains at 6,484, and that will be my ultimate target any pop next week. So any pop back to 6,700 come Monday, certainly looking to short this for potential 6,560 and 6,480 on the downside. So FTSE remains exceptionally vulnerable in my understanding. Okay, in terms of European indices now, let's quickly go over to the German DAX weekly chart. Again, still lagging, pushes higher, but not very convincing to say the least. But remember that fact that we have had talk of more QE. Okay, so again, that will be your focus. Any pop higher certainly seems to be facing resistance anywhere above around the 14,140, 14,200. Okay, you've got an unfilled gap at 13,780, so potential support at 13,400. But again, the focus remains on the QE talk. Okay, all about QE when it comes to Europe. Now, the euro certainly has been hammered. The euro certainly hammered on the back of stronger NFP numbers, as you can see here on the daily chart. Now, this is obviously acting as a stimulus for the eurozone because a weaker euro helps the export side of the equation. I mean, it's been one hell of a sell-off from 1.2250, obviously down to 1.195. If Europe obviously pushes back on any further QE, then obviously we know exactly what's going to happen. Euros rallies, spikes, and obviously causes European indices to come under pressure, and obviously bond yields will certainly get hurt, and then obviously the bond yield story will send Europe down as well. So interesting scenario. Daily chart obviously holding resistance there. 60-minute chart, it seems like each time we test that key resistance zone we just fail. Gap fill certainly held as well. Double top resistance here, gap fill resistance here. You've got an unfilled gap below on the German DAX around 13,800, and obviously you've got 13,600 as well. So again, all about central banks really, in terms of, I'm not a big trader of the German DAX, very, very volatile indices. Okay, I do prefer the French CAC and the Euro Stoxx, so let's quickly go into that. Okay, in reality, Euro Stoxx is just a smaller fraction of the German DAX and less volatile. So okay, so French CAC again. Now French CAC is very heavy commodity laden, so keep an eye on that. Okay, any potential sell-off in oil and a rally in dollar will certainly hurt the French economy to a large extent. It has broken out, but there's been no convincing rally or move higher or thrust or momentum or continuation. In terms of the 60-minute chart, it certainly looks like it's it wants to move lower, let's put it that way. Obviously, you've not had a higher high or a double top. You've had a lower high. You've got unfilled gaps below. Okay, so the first unfilled gap is seen at 5,700. Support of 5,640, and obviously gap fill at 5,610. So watch out below. That's basically the message there with regards to French CAC. Euro Stoxx, again, the unfilled gap certainly remains a target for now, 3,630. So watch out below in terms of the Euro Stoxx. Now you are looking at resistance here at 3,716 for the Euro Stoxx, and obviously support at 3,660. Like I said, gap fill at 3,635. So Euro Stoxx, in my opinion or my understanding, certainly remains weak. Okay. 60-minute chart, double top there, lower high. That's what we're expecting at present. Okay, potential H&S reversal as well. Daily chart, as you can see, hit a brick wall at 3,740. You've got multiple gaps, 1, 2, 3, 4 gaps to fill, 5 gaps, on the downside. So we know exactly where that's going, potentially even 6, do apologize, 6 gap is here. So whenever a market has multiple gaps to fill on the downside, it's very vulnerable, especially after it hit a double top. So if we see any hawkish commentary from the ECB next week, expect a flush. If we see a dollar rally and yields spike and yield concern, again, expect a flush. So this market really remains very, very vulnerable. And obviously, we've got the talk about a potential third and fourth wave of the COVID scenario and situation in Europe as well. Even with these vaccinations, the numbers are still exceptionally high. So again, cause for concern. Any potential derailment in terms of the reopening, again, looking at risk off. So I think I've given you insight here in terms of the bond market, in terms of the commodity sector, in terms of the equity markets, even Forex as well. So pretty comprehensive analysis there from an intermarket analysis perspective. Anybody who does want to obviously learn intermarket analysis, which again is absolutely crucial, absolutely pivotal to day trading. Anybody who doesn't understand intermarket analysis, absolutely pointless day trading from my perspective. You really are a day in light. So all I can state is absolutely essential. So if you do want to start off with these 2 books here, if they are quite complex, and start off with Anna Cooling's book, which is highly recommended as well. Again, and certainly get in touch with me. You can certainly get in touch on my site. Get in touch via Twitter as well. I certainly run a mentoring program on a one-to-one basis, so we can certainly get that organized via Skype. Again, it's usually a 4-week course, and then I have the live analysis service where I take my trades in real time. The last 2 weeks, over 500 points, so pretty good overall. Okay, so you're more than welcome to join that as well. That's usually a 1-month free trial. Anybody who wants to join with regards to that, again, just message me on Twitter if you want. My details are on my site as well. You can certainly catch me on my site. Just quickly show you my site, inter-market-analysis.com. So certainly join me there. My email address is over here on my site on the right hand side, daytrader@inter-market-analysis.com. Get in touch, throw me an email, and again, happy to provide you with the service of mentoring, which is obviously here. Those that want to join the live analysis service, then obviously the details are on my site as well. All you need to do, either email me your mobile number, I'll add you to the WhatsApp group. All the details are here on the left hand side. You can choose which one you want to certainly inquire about, and again, get in touch. So wish you the best going forward in terms of Monday's trading. And I try to keep these videos short, folks, but as you know, if you are covering obviously a comprehensive insight into intermarket analysis, it does require some time. And I wish you the best for the week ahead. Goodbye now.